Welcome back, Middle Age Grind. Today we're going to be going over part 3 of our insurance basics, things you need to know. And this is one that's pretty near and dear to me and should be to a lot of people. And it's life insurance. And I want to go over a few things with you. One's going to be who should have it, and what types they are, and how do you determine how much you need. And with that said, I'm going to get right into it here. And the first point, and this is just something we were taught way back in life insurance school, I guess, so to speak. If you take the acronym LIFE, okay, and you break it down like this is going to be determining how much you should have. The L part, we like to say, is legacy, right? What do you want to do if you're not here anymore, right? And most people say they like to pay off all their debt. So depending on where you are in life, that could be your house, your cars, student loans, credit cards, whatever. This could be pretty big for some people. It can be absolutely zero for others, depending on where you're at in your journey. Another thing too, like myself, I have 4 children. I've mentioned before, kids' education. How much you want to set up for that, to kind of prepay that or have the money there when it's needed. This is the biggest one probably of the whole thing, is the income replacement part of the deal. This is always going to be something that it's going to be unique to that person. I think 10 years income replacement probably is something that's very common. If you're making $100,000 a year, 10 years, that's $1 million right there, guys. That's a big deal. If you do take care of some of these things here, you maybe could back off of this a little bit because your wife or your husband or whomever won't have that house note anymore, those car payments, if you're going to pay that off with the proceeds from the life insurance. But this is the one you have to really look at. And even for a stay-at-home mom or dad, a lot of times, well, they don't make a salary, but what do they do? They watch your kids. They take care of the house. You really need to have something there if something happens to them as well. The F in life, final expenses. This is going to be funeral home, whether you choose what type of burial, cremation kind of thing. Typically $25,000 more than covers that, depending on where you're at. And the E is going to be anything extra, and people sometimes don't think about that. That can be all kind of stuff. Think about if you have a charity you really feel near and dear to and want to donate, a pet shelter. You have an adult child with special needs that needs some sort of financial assistance for the rest of their lives. That's where that number would come in there, okay? And this is how you determine how much you need. At different stages in your life, there's going to be different, amounts and that kind of thing. And that's where we're going to get into the next part of it, in the term, the whole, and the universal, which are the 3 major types of life insurance. Term is usually the cheapest because it's for a certain amount of time. Think 20-year terms, 30-year terms. You pay a premium. If something happens to you in that time frame, that term, the life insurance company pays out to your beneficiary, right? When that term is over, that's it. Okay? It is the cheapest option. It's probably the one that's most used, and probably rightfully so, because as I mentioned before, if you're doing all the right things, the hope is when you get later in life, you have all the legacy stuff kind of taken care of. You have a nice portfolio, your house is paid off, that kind of thing. And this can kind of go away as you get older. Whole is a permanent policy, good for your whole life. The premiums are level. It's more expensive. It does build cash value, right? there are different types of whole life policies, and I'll get into that now. I like the ones that have a certain period where you pay into them and then they're done. There's 10 pay, 15, 20 pay. There's even a company, I have a policy from a previous company I worked for, a 65 life, meaning you pay till age 65, then the premiums are done. The thing I like about that is when you get into retirement, I think the goal is to kind of eliminate as many bills as possible. A true whole life policy, the premium does stay the same, but you pay it until you die. So if you live to 80, 90 years old, whatever, you're paying that premium on a monthly basis until you pass away. Nothing wrong with that. It's just, I think, like I say, the goal in retirement is, for a lot of people, is to eliminate as many bills, debts, even though this is not a debt, but it's a bill, nevertheless. And universal life is another one I want to cover today. And that's a mixture between term and whole life insurance. The cost of insurance does increase as you get older. There are some boomers, I find, that bought some of these policies back in the day from different companies, and they kind of run into trouble if they're underfunded. What do I mean by that? A lot of times, these policies that were sold in the 80s and 90s to people who were probably in their 20s and 30s at the time, the cost of insurance was not very much, so policy was doing great. Well, a lot of times they illustrated values where interest rates might have been 8, 10, 12%. You're earning money on that. Well, what's happened over the past 20 years? We've been in a very low interest rate environment. So those policies haven't performed like they thought. So what happens is, as you get later in life, the cost of insurance goes up. The amount of money in the account wasn't what projected was supposed to be. So instead of lasting to age 90 or 95, they're running out sometimes at age, in the 70s, which is a problem. You have to visit with your agent or your life insurance company representative and see if there's things you can do to make that last longer. One will be putting more money in the policy. Two, sometimes it's reducing benefit. So that's something you want to look at if you're looking into that deal. And I'm going to flip this thing back around here now. Give me a second.